The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. Let's take a look at the German Bund. As you can see, we've completed a Gartley pattern here on this hourly chart. Very interesting. Whether it's going to mean too much or not, we'll have to wait and see, but we'll switch over now and go over to the UK, and we're going to bring up the chart for the FTSE. And as you can see, it's fighting for its life here at that blue line there. So far, it's held pretty nicely, and of course, if it breaks, we'll be looking at more to the downside. So those are just a couple of the overnight markets. Of course, we're having the jobs report out today, and it's made everything copacetic. Everything's all right in the world again, so there's no problems anywhere. So that's the key to remember. There's no problems anywhere. Anyway, let's move on, and I want to just share a couple of them with you that I think important. One is, folks, we had something happen in natural gas here on an hourly chart just the other day, and then I wanted to, you'll be able to see, this is the 60-minute chart. You know, it's going down to that 3 drive to a bottom pattern at the 220 level. You remember we were looking at it at 230. We got out of it at 226, and we're looking at possibly buying it again. But one of our listeners, kindly enough from the UK, was kind enough to send me a chart of the natural gas. Let me get this up here. Shut the front door and raise the rent. Where is it? Oh dear, here it is. Nope, that's not it. What did I do with it? Shut the front door and raise the rent. Doggone it. It's got to be here somewhere. Well, I can't find it. That's not fair, Larry. Where did you put it? It's got to be right there in front of me somewhere, but it's paying, found it. Yay, shut the front door. All right, here is the ETF for natural gas. I want to bring it up here, and you'll be able to see it. This is a daily chart. You can see that double bottom that's there. That could be a very, very interesting double bottom, folks, because if it doesn't break below that 300 level, we got a shot here for a move here in natural gas on this ETF. I don't trade it. Just keep an eye on it and see whether it's going to move on or not. Let's move over to what I think is important. Well, that doesn't mean very much. Let's bring up this chart right here, which is the largest of all the futures contracts that we trade, which is the Treasury notes. You'll notice here that we've just completed the ABCD pattern from October the 2nd. We went right up to that number, 132 even, and so far that has held, and whether that'll keep going up or not, remains to be seen, and heading towards negative interest rates, that I don't know, but this is what's happened at least so far today. The reasoning for me to bring this to your attention today, folks, is that the last several days, the open interest in these 10-year Treasury notes, which are the largest of anything that we trade, has dropped, and it dropped yesterday, even with the market going ballistic to the upside. So that is a sign of short covering. It's just a matter of time before it rolls over. But when that is anybody's guess. All right, let's walk through what I think is important. All right. Whether you believe this or not, I don't know. I'm going to give you my 2 cents worth because I think it's definitely worth 2 cents today. So let's do the first one, and that is we're going to see where we were with the ES here just the other day on our first break. I want to walk you through the scenario. If you like Fibonacci numbers, you're going to like this. If you don't like it, come back in 10 minutes. You'll see we made the 61% retracement at the 28.70. And then on the next time what we did was, this was yesterday, And you'll notice here what we did yesterday. It's hard to, I didn't make these numbers up, folks. Yesterday, what we did is we made a new low. We went down to the 786 of the low from the 26th of August. And that is a very, very important number. We had a huge rally. You notice we had a very strong rally of well over about 60 handles, which is quite a bit. We were down from 30.20 down to 28.60, so we dropped 160 candles on the downside, and we rallied back 60 candles. Anybody that's good with mathematics would see that that is a 382 retracement. Now, here's what I think is important. Let's get this up here, and we'll be able to see this. 1 second. You'll get this up here. Here's the next one right here. This is here. This is what we were looking at for today. The 382 retracement comes in at 29.20. Now, whether that's going to be, that's off the whole thing too, folks. Whether that means anything or not, I don't know. These are just numbers. I'm just trying to humor me a little bit. You know, you got to keep the old man laughing a little bit once in a while. That leads to something that could be very, very interesting, and that is, if in fact that 382 is going to be correct, and we don't know whether it is or not, do we? No one knows that. But if that is correct and the market weakens, you're going to be looking at a market that go down 125 handles or more very, very quickly. Now, you might think that that's a lot, but we've done that several times. We did that during that July break, folks. We broke we broke several hundred, about 600 or 700 S&P points, and nobody paid any attention to it. So the $64 question is this going to mean something or not? I don't really know, but you know what? Nobody else does either. I'm just looking at numbers. That's all I'm looking at. So, and we did these same numbers with the NASDAQ, and you'll see here again we did the same thing with the NASDAQ. It went right down yesterday to the 78% level. Remember, that was the day that Arch Crawford talked about the key cycle date, that he thought it was really important, which was the 3rd of October. So let's remind ourselves of that. Okay. The other thing that's important from my standpoint is yesterday was the 2nd of October of 1987 was the rally back. We had topped in August the 25th. We went down into the 26th of September, and then we rallied back to an exact 61% retracement on Friday, October the 2nd, and then Monday the market started down, and it went down hard into the Friday the 16th of October. And everybody knows what happened on the 19th of October. There was a big drop. I don't know if anything like that's going to happen or not. All I know is that if we close below the low we made yesterday, we're going to get something really bad. That's all I can tell you. I don't know. We'll see. I'm just trying to look at here. Let's just get this up here so you can see the potential that's here. And nobody thinks this of course could happen, and maybe it's not going to, but let's just look at this here on a bigger picture. You'll notice here that that importance of that number. So we're trading at 29.01, and we're looking for a move to the 382, which is 27.60. Look what happens if that fails, folks. We haven't had anything really bad happen. Look what happened during September to December of 2018. We went from 2,900 in the S&P down to 2,300. We dropped 600 handles. We've dropped 125 handles in 7 trading days. This is not a good sign from the bullish standpoint, I don't believe. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we're going to switch over to the gold market right now. Several of you have asked me where I get that phrase, shut the front door and raise the rent. It comes from a movie with Cleavon Little and James Gardner called Support Your Local Sheriff. And I've always liked that, and I've been using it for a very long time. Some of my friends over in the UK got a big kick out of it. Anyway, let's take a look at this gold market here. We had the head and shoulders pattern. We've had the rally. Now the rally went from 1465 up to 1525. That's quite a bit of a rally, folks. If you measure that just for the heck of it, that comes out to what, $60? Very close to the harmonic number, 34 times 2. We're now backing off, so we should see a $34 retracement here, and that would take us down 1525 down to 1495, and none other than our good friend Mr. 618 himself will be sitting there waiting to see if that happens at 1495. We are in a downtrend in gold, folks. You can see we've had lower tops in here and lower bottoms, so nothing has changed yet. If we get above 1545, things have changed, but thus far it has not. We are in a downtrend. Whether that continues or not, I don't know. But you know what? Nobody else does either. So let's keep that in mind as we see these things as we go here. Yes, I knew Mel Brooks very well. He was at Hollywood Park a lot and also at Santa Anita, and he is a hoot, I'll tell you that. He was there with Harvey Korman, and I'm going to tell you, when those two guys were together, it didn't make any difference whether they were on camera or not. They had a lot of fun. So it was the guy that was really quiet but very funny was Don Adams. He was really good, and also Tim Conway. But Tim Conway was so shy you couldn't get anything out of him as far as a response. Let's move on here to one of the things I wanted to mention to you about the silver market, folks. The reason why we want to keep in mind here that this is still a bear market here in gold and silver because of the lower markets here. You'll still have that outstanding pattern down here at 1660. We filled the gap, as you can see here. We did fill that weekly gap, and we did have a pretty nice rally, but hasn't gone anywhere, as of yet. So we'll do one thing at a time and see which one of these markets gives us the hint. But right now, we went up about $60 off the low, and now we're having the correction as we might expect. Now, this was sent to us by our good friend Rich Anderson over at Anderson Capital Management, and it's about this ISM numbers that come out that everybody's been talking about. Remember, folks, I am a technician. I don't know what ISM stand for, but it's ISM non-manufacturing, and whatever these numbers are, and there's just a chart, but it shows you that when these things turn down, that sometimes over the last 20 years, it's led to two recessions. Whether it'll be a recession this time or not, I don't know. But, like I mentioned many times, nobody else does either. But all I do know is that the market is under a great deal of pressure right now in the stock market. It would take something very, very dramatic to change my mind, move like 700 points up in the Dow Jones or something like that, then I would certainly take a look at it. The problem is not in the stock market, folks. The problem lies in the bond market. And if you take a look here, this is the high-grade bonds. We haven't looked at these in a very long time. You'll notice here that these high-grade bonds broke that trend line that was there. They closed right on it yesterday, but they have a potential to have a move substantially to the downside from here. Now, I don't know how our notes and bonds are going to react, but all I know is that open interest in notes and bonds has not been positive, but the market goes up, and that's mainly because of the short covering. That's what I'm watching here. By the way, if you would like to call in, it's 877-927-6648. Now, someone asked me about the $17 harmonic number in gold. That's one half of the regular number, which is $34 an ounce. And we expected it to be more than that. The reason why we had our high at 1525, I believe. And if you take 17 off of that, that takes you down to 08, and we've already broken below that already. So that tells us that we're most probably heading down to the other number, but that would be at 1495 if in fact that is going to be the case. One of the disadvantages about being a technician is the fact you don't get to bring in any of the fundamentals that are out there, like these ISM numbers and all the other stuff, and you just have to look at the chart. Basically, what you're looking is whether the doggone thing says buy. If it goes higher, you see the bars going up. If it's lower, the bars are going down, and that's it. I noticed that Marshall's asking about the Japanese yen. We'll take a quick look at it, Marshall. It will not be up to date, Marshall, because you caught me by surprise, but you do that all the time anyway. So let's find it here if we can. And therein lies the rub. Uh-oh, this rub's not looking good. I don't see the Japanese yen here, Marshall. Boy, that's not good. But I'm going to do it for you, Marshall, because you're special. And where is the Japanese yen? I'm writing it to currencies. I don't understand. Did I miss the Japanese yen? Let's just do it for Marshall right now as we come up here to take a quick look at this. Get this market up here. We'll get the old Japanese yen. That starts with a J, doesn't it? All right, we'll do the daily here. Almost ready, Marshall. Be patient. Be patient. Oh, whoa, Marshall, good shot. We just hit a Gartley in that puppy. Shut the front door and raise the rent. I got to draw this in, boys and girls. Hold on here. Let Mr. Rogers put this in, and we'll I don't know if you know this, but Mr. Rogers was a war hero. Let's get this up here so we can take a look and let everybody see it. Here is the That's making. In fact, it just made it yesterday, and it's testing it again today down at that 106.50. So that is a Gartley, folks, and it's also it's not a really good head and shoulders pattern because you don't have any symmetry between the left shoulder and the right shoulder. The prices are about right, but you'd like to see the time between the left shoulder and the right shoulder to be correct. But in fact, it's not really that way. But we'll see. Here, let's look at since we're watching this, let's just look at the Japanese yen on a little bit longer time frame, and that'll get us a little better idea. Also, work on some time here for Friday. You notice that we had that 5-week rally here that stopped right at the 382. We've now backed off. We've just made that little Gartley that we just told you about at 106.50. As long as we stay above that, we have a bullish bias. But right now, this market is just holding at that 61% retracement again that we hit way back in March of 2018. So very strong support at 105, strong resistance at 108. When it comes out of either one of these, that'll be where you'd want to pick the spot to see whether the market's going to move in that direction or not. We'll have to wait and see. Okay, any other questions that anybody might have? I want to get to the next chart that I wanted to cover here. And let's just move on to the next one here. I think we did this one right here. Apple, how much is Apple up? $2, 2.5%? How much is that? That's $4 or something, right? Apple is a stock that just keeps on giving. You can't beat that doggone stock. It's a very, very good one. Okay, let's. Does that pattern recognition charting come from Art of Timing the Trade charts? Yes, David White does that. David, why don't you tell them about that? But it's a really great charting package that they have in there. But we'll be right back. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White has had some great trades in his daily trading newsletter, The Path of Least Resistance, and now's a great time to sign up while saving 25%. Just use promo code OPTIONS at checkout and you can save 25% off your first month. And this offer still comes with a 30-day money-back guarantee, so you have nothing to risk. Dave has had some great options and equity winners over the last couple of months. If you'd like to see for yourself the types of option trades he recommends for his subscribers, then check out all the details on the front page of TFNN.com. This offer only runs for 1 week and ends this Sunday, October 6th, so don't miss out. Head on over to the front page of TFNN.com right now for all the details and to start your 30-day money-back guarantee subscription to the Path of Least Resistance today. Remember to use promo code OPTIONS at checkout. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we've got Rich Anderson of Anderson Capital Management on the line. Rich, how are you doing today?
Doing great, Larry. Doing great.
Listen, Rich, let's talk just a second here about the soybean meal. We had a pretty good bottom forming in there the last couple of weeks. We had a really strong rally, and in a matter of a couple of days, they gave quite a bit of it back. What's happening over there in the grains? Anything with the tariffs?
Well, the Chinese are coming next week, and, the anticipation is because they're coming here that they're willing to make some kind of a deal on some stuff. And I think given the situation that the president is getting pounded on from all sides, he is likely to want to make a deal. But given that pressure, the Chinese may not be as excited about making a deal as they were 2 weeks ago. Nobody seems to think about the drag that if this next round of tariffs will have on the economy. And it's, it's a lose-lose for everybody right now. Anyway, there's optimism that something will be done. The Chinese are coming here. But, I'll believe it when I see it, kind of thing.
Yeah. Did you realize that Singapore is passing a law about fake news? That it's a $1 million fine and 10 years in jail?
Canada has laws about what you can say and not say, and it's unbelievable.
Wow.
In fact, they would like to tell you what to say.
Yeah.
Although Dr. Jordan Peterson challenged them and won that court decision.
Rich,
he said you can tell me what not to say, but you can't tell me what to say.
Well, who knows? Rich, we have a question about the cattle and the hogs. Could we do hogs first?
Sure.
Okay, we're trading up around that high 60s right now. What do you see in the hog market? Is this flu thing over in Asia, or what's going on?
Well, the flu thing is expanded into Vietnam, and they've in China, although it's hard to get exact data, they've probably liquidated percent of their hog herd that's equivalent to the whole hog herd in the United States. And they've been depending on some frozen supplies of pork, particularly during this holiday season, because in a communist country, you don't want your people to be hungry. That tends to cause revolution and overthrows.
Yeah,
but so that's the one thing they need the most. So if we're going to cut a deal, we're likely to cut a deal for that. Possibly, they have rural air pollution as a problem. Corn for ethanol in one form or another. That'd be another thing. Frankly, the beans and the meal have looked pretty good. I suspect it's because our yields won't be as good as we expect. Harvest is way behind time. The rain that we've gotten in the last several days. Southern Minnesota had flood watch yesterday.
Wow.
Or the day before. It's unbelievable. The percent of corn harvested in South Dakota last Monday, I think I sent Jimmy a thing. It's 0% in South Dakota, and it's normally 90%. We're just way behind. And I suspect with the beans, because they grow based on the number of daylight hours of sunlight, it's probably going to impact yield. Because initially, China, when they rebuild their hog herds, they won't need extra soybeans for 6 to 9 months. So the fact that the beans and the meal are acting as well as they are, it's frankly kind of impressive to me.
Well, it
but I don't
certainly
want to
is.
see them, I don't want to see them fail, but they're acting quite well. And the pork, if they cut a deal with the Chinese, the pork's likely to be the biggest beneficiary, and that's the one you got to like. But maybe you don't need to be in December. Maybe you need to be out in February or April.
Oh, okay. Is it pretty good open interest out in that area?
Ever since the Tax Reform Act in 1987. The vast majority of trade is in the front month. That's where the liquidity is. But, if you're holding something for more than 20 or 30 minutes, you can establish a position out there. I tend to establish positions in second or third options often because I'm giving myself time.
What do you hear about zero interest rates? Is the Fed going to drop again? Does it make any difference?
Well, the one thing that people don't give enough credit to is that every time the dollar strengthens, that's like raising interest rates. De facto, that's what it affected is to the corporations. And so the cut that is expected, fully a cut is expected now, and the talk is whether or not we get another cut in December. Basically, you're seeing our interest rates being dragged down to the world prices, which are negative. And the ISM survey this week showed that the manufacturing was below 50%. That's a precautionary, usually foreshadowing of a recession. The service sector is down, but still above 50%, and that's what's got everybody nervous, particularly the Fed.
Oh, it makes pretty good sense. What about the feeling about what you're hearing about these big moves that we're having in stocks, down 600-700 points, reversing and stuff? Any feedback from any of your colleagues?
Well, I had some colleagues that had a meeting yesterday with with one of the biggest money manager firms in the country, and nobody has the answers. There's too many unknowns. There's Brexit. There's Hong Kong. There's our trade deal with China. There's whether Nancy goes wild on Trump. How does Biden do? How does Bernie do? How's Bernie's health? I mean, the market's waving and moving up and down on these little items, and that's what's hard about being a fundamentalist is that in this Twitter world of today, it's whatever's tweeted last that's got everybody's attention, and then all these computers are set that if they see keywords, they buy it or they sell it, and then it steamrolls on itself like dominoes, and that's what's going on.
Wow, awesome. Wow, it's pretty cool. Rich, I want to thank you for coming. Do you have any trade that you really like for the next couple of weeks that looks interesting, Rich?
Well, the last one last time I was on, I said you got to be on the horse that's going, and that was silver. That's had its run. I'd be sitting back and watching these grains. Once the farmer does finally get her harvested and get her put in the bin, I think you'll see elevation in prices. You saw that in the Minneapolis spring wheat, but that market doesn't have liquidity. I'm kind of watching any good pullback in the corn or the beans. I think that's where the next horse is going to take off from.
Well, listen, thanks for joining us, my friend, and enjoy the warm weather because pretty soon it's going to be snowing over there.
I know. There was snow out in the western part of the country, and it's coming this way, believe me. I know.
Thanks a lot. Thanks a lot, Rich. Rich Anderson of Anderson Capital Management. We'll be right back after these few words from our sponsor.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you're a trader in the market looking for exposure to gold or gold mining equities, then now is a perfect time to sign up for Tom O'Brien's Gold Report. The summer is over, gold is trading back above $1,500, and the 10-year Treasury is hovering at around 1.5%. Tom O'Brien has been writing his weekly gold report for almost 18 years. There's no one that knows more about how the gold market trades and how gold mining equities react. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, Tom publishes his weekly gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, the dollar, as well as more than 30 different mining equities. As of September 3rd, Gold Report subscribers have 5 active open positions with an average unrealized profit of almost 38% for each position. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up today by visiting TFNN.com. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, folks, I'm going to bring up the chart here of crude oil. This is where we were last Friday. You'll notice that trend line that is drawn in there with the cycles on the bottom. The reason why I did that is because this was part of the work by Jim Hurst, Profit Magic of Stock Transaction Timing. But you'll notice here how we've broken down. We've got down to the 52 level in the crude level, making a triple bottom down there to see whether it's going to hold that or not. But the reason why that is important, folks, is that's where I used to give all my money back in 73, 74. I would buy on those 19-day lows, but the 19-day low came and rallied 2 days and be down 17 days. It was very, very painful. So that's when I started to learn to really be a technician, and neither here nor there. But basically, I look at the bar charts. You'll notice there's never any oscillators on my charts. I've proven to myself that I just can't find any use for them, but that's neither here nor there. Some people can work with them very, very nicely, and I think that's great. I just look at the patterns and the ratio, and like Curly in the movie City Slickers, one thing, try to do one thing right, and the rest of the stuff falls into place. And sometimes it works, sometimes it doesn't, but most of the time it'll keep you in the game or not. Now, I've had several people ask about a potential buy in copper, and I want to bring this up here and take a look at it. I still believe that we've got a chance to see copper down around the 240 level. There's just too many numbers down there that are pointing in that direction on the longer term ABCD structure of that. So let's kind of make it important. I wanted to spend just a little bit more time about when we talked about yesterday about what happens when you go through these real bad periods in your life, either trading or personal and stuff like that. And one of the most damaging for me from a personal standpoint was going through a divorce, which I did in 1985 and 86. And one of the things that happened to me is one of my very dear friends sent me down to Palm Springs up in the mountains up there. They had a retreat, and I was there for 2 weeks. It was all about fasting and all about silence, and those are two things that are really difficult. Well, my roommate, I shared a cabin with a man, and he was from Hollywood. His name was Colin Higgins. Well, I happened to recognize his name because he produced the best movie my kids ever watched, which was Foul Play, with Chevy Chase and Goldie Hawn. And anyway, he was my roommate, and we were there for Silence and Fasting. And he said, I told him I was a big fan of his. He says, well, I would really appreciate it if we stick to the silence part, nothing personal. I said, absolutely. I said, I understand that. And I didn't say more than, I think, 5 words to him, maybe during the whole 2 weeks. And it was really, the silence was much, much harder than fasting, folks, let me tell you. We wonder why I'm on a radio show. Anyway, when I got back, I got a letter in the mail from him, and he was very happily to tell me that he was glad that I did that, and he had a $500 gift certificate to Tiffany's, which my daughters were able to use. But anyway, it was a very interesting time that I went through and stuff, but it was very, very hard to do the silence. The fasting was easy, but the silence was really, really difficult. Okay, I want to cover a couple other things that I think are important from the longer-term standpoint, and that is, let me get the price of the corn up here, because we had a really nice move in this corn. This is from where we were last week. As most of you know, we had this, yes, Dudley Moore was the conductor in that. Yeah, he was very, very good. That one I love. Okay, $5 to anybody can remember the name of the snake in that movie. Remember the snake that hid the cigarettes where the file was held? Does anybody can remember the name of that snake? My kids we always have a joke on what trivia of the movie. Anyway, very good. Very good. Oh, Al wins the 5 ISME. That was the name of the Burgess Meredith snake, was ISME. Very good. Oh, I must have told you already, didn't I? The $5 is in the mail for Al, so we'll see. Okay, let's just take one look here at this natural gas, because remember, we were looking to buy it. The snake's actual real name was Shirley. That was the real name of the snake? Boy, now that's good. That's really good. I didn't know that. Okay, now we got down to 225 in the natural gas. We nibbled at it at 30. 225 it's hit, and I've already posted the 3 drive to a bottom pattern that it hit. So we really want to watch that very, very close. It's very, very interesting. By the way, we actually took a trip up there to Sausalito where that houseboat was there just to see it, and it was pretty cool. I had some contact with Colin Higgins after the show and everything to thank him for the nice gift, and he did some nice things for us as far as seeing some things. But he passed away of AIDS. He wasn't gay, but he had a blood transfusion for a liver problem that he had, and the transfusion was tainted, and that's what he actually died from. So that's going back a long, long time. We've had a question about the Bitcoin. Let's get this up here. It's trying to hold for its life. Whether it's going to or not, I'm not sure. You'll notice we're down to that 8,000 level. Breaking below that would set up 6,000 again, but it's hard to believe this was at 19,000 back in January of 2018. So it's had one rocky road through here, but it's all about blockchain technology and not about any of that other stuff to watch. Regarding the market, let's just double check to see where we are here on some of these things. Okay, folks, I don't want to scare anybody, but by golly, I look at charts a lot. And when I see charts like I see in this E-mini S&P, this is quite scary. I mean, to me it is anyway. I've been through these before. I happen to be bearish, but that doesn't mean a whole lot. But just be careful, folks, because we could easily break down, quite a bit. I mean, it's not a problem. Let me just show you where we are with the Hang Seng Index. Let's get this up here right now. That we've now broken on this Hang Seng Index. We've broken below that key 61% level. You see the 135 pattern, and if you defy human nature, do the work yourself, go look at the weekly chart on the Hang Seng Index, and you're going to see a market to get easily drop 20%. from where we are now. It could go down to 21,000 without any trouble at all. And folks, it went from 30,000 to 26,000. That's 20%. It did that in 2 months. And it went from 3 to 5. It did another 6,000, 7,000 in 2 months. So another 6,000 is no big deal. So, and there's a huge bottom down there in the 20,000, 21,000 in the Hang Seng, but that'll come out into the future a little bit. But we're seeing some volatility now, and there's not much. Most people are not paying any attention to it. The VIX is still very, very, calm. It should be trading up around 40, and it's half that. So nobody's scared. I'm the only one that's scared. I don't know, maybe it's a function of old age. I don't know. But anyway, maybe this won't happen. I hope it won't, but we'll see. But if it does, we're still going to be okay. Remember, the best buying opportunity of the 80s was in 89. That's when 87 when we had the crash. And that was exactly 61% of the low from August the 9th of 1982. So we're still a great country. We've still got a lot to go here, but we'll see what happens. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we're going to take a look at this U.S. dollar index over the past year and a half. If you'll notice right under the heading there, the U.S. dollar index daily, you'll see those two little red boxes at 1.618. That's the importance of that number. That leads to the ABCD pattern. It is there. You notice we've never been able to exceed that 99.40 level. This last point that someone asked about today, is that a head and shoulders pattern that we're seeing in this market? There is a possibility of that. The difference is the right shoulder, if you'll notice where point D is there on the chart, that's completing the ABCD pattern. That right shoulder is higher than the left shoulder. So that doesn't have a nearly as bearish bias if the right shoulder is lower than the left shoulder. But as far as time and as far as price, it certainly is. You have the expansion on your left shoulder to your head, and you're from the right shoulder, you're at a 78% level. We had a pretty bad day in the dollar index yesterday, or this week. The euro rallied back from that 108.60 level. But until we get above that 99.30 level in the U.S. dollar index, it looks like it's completing this big ABCD for a major correction. Now, we don't know, but all I know is if we get above 99.40, it's clear sailing all the way up to 101, and that's a big move. That would take the euro down to that level we're looking at of around 105. It's trading at 109 and change right now. So if that euro gets below that 108.60 again, look out below, because the only thing there is at 106 and 104, and then we could get back to parity. Because remember, the euro's been at 85 several times and rallied up to 160, so it's not afraid of wild swings. The one thing we want to remember this weekend, folks, is to try to do something nice for somebody that doesn't have as much as you, and live every day in an attitude of gratitude, and you'll be happy that you do that. And also to shut the front door and raise the rent, and make sure you have a wonderful weekend, and may God bless. And I will see you folks on the flip side. And next week we will be having as our guest, believe it or not, Mr. Bill Meridian of Cycles Research.